Okay, so very important video today, perhaps one of the most important videos of the whole course, because we're going to get into supply and demand, also known as order blocks. Call them what you will, but these are very important areas to know how to draw, when to draw, and where to draw on your charts for you to improve your general technical analysis, your understanding of the market, and therefore to get better probability trades, more precise entries as well, because we're going to now be diving into the actual footprint and looking exactly at what price, the amount of contracts, the volume of trades, the volumes of buyers and sellers. So this is very important stuff. Now, before we get into some examples and before I start explaining all of this, I need to establish something very important. I think that most of you already understand is that there are two types of market of buyers and sellers in the market. There is the market buyers and sellers, also known as the aggressive buyers and sellers, and there are the passive buyers and sellers, also known as limit orders or stop orders, okay? So what you see in a candle on the footprint chart, you only see the aggressive buyers and sellers. You do not see the limit orders. They could be, and there probably was, some buy limit orders within this range here, which help pushing price to the upside. And we had also some aggressive buyers that we can see, as I've established, in these candles. But the limit orders and the stop orders, we will have to deduce by seeing absorption. We will have to deduce or infer that they are limit orders in any given area. So, having said that, we are going to look at two different types of order blocks or supply and demand. The first type will be based on just a large amount of buyers, market buyers, aggressive buyers, or sellers, large amount in big clusters or high volume clusters like this one. Within the candles, this will be the first type of order block based on aggressive buyers and sellers. And the second kind of order block will be based on absorption by the limit orders, okay? So having established that, let's start with some very simple examples, just looking at the aggressive orders and aggressive buyers in this case. Let's look at what happened here. If we just look at the structure, we have an uptrend, okay? We have an area of resistance here, and we have a breakout of this resistance. Now, on the breakout, what do we see? We see actually we can make a smaller order block here, because this is where the action happened, is as we break out, we close above that level of resistance, now potentially becoming support, and we have a huge cluster of positive delta, a big cluster of buyers, and the candle closes above them, which is very important. If the candle had closed down here and these guys were trapped and absorbed at the highs, it would be a totally different story. But in this case, we have a huge amount of buyers and we close above them and we close above this resistance, potentially becoming support. Now, about these numbers here, you can see visually, if you just zoom out here, it is very obvious where your eyes are drawn to. They're going to be drawn to this, what's the word I'm looking for here? This spike in volume, excuse me guys. Spike in volume is very obvious visually because that's what the chart does for you. But if you compare the numbers here, 101, look at the amount of contracts that were traded within this range here in the previous, 20 candles. The highest amount of contracts, whether it's negative or positive delta, 41, minus 41, plus 36, plus 32, plus 49, and plus 40. These were the highest clusters we've had before. And now, as we break out, we have a double the amount, essentially, of the highest cluster we've had before, okay? So we have a huge spike in volume, and in this case, in positive delta, breaking out in a bullish breakout. So this for me is a bullish order block. And we expect, I would have, these are not trades that I took, by the way. Later on, we will be looking at some actual trades from my trading journal. But for now, I'm just going to give you some more basic examples off this chart. So here, this is a bullish order block. I would have, if I'm trading a breakout here, I'm very happy to have an order on the retest of this order block here, and stop loss below the EMAs and below that support resistance flip, okay? So here we have another example now, a very similar story. We have a range, and as we break out, we now have stacked very strong positive delta here, 81, 85. Again, if you compare these numbers to what we had earlier within this range, well, we had some decent buyers here, okay? But if you look at the other numbers, 40, 30, 32, 134, we're going to talk about that in a second because that's interesting. But that's it. These are the numbers we were seeing earlier. And now we have stacked above each other 81 and 85, which is much higher than what we had seen before. Now, what is interesting within this range is that not only are the buyers taking over because we're closing above this range and we're closing this candle above this cluster, this double cluster, stacked cluster of buyers here, but we have these huge amount of sellers. I mean, that's a bigger amount than the 101s we saw down here, right? And these huge sellers are within actually a bullish candle, so completely inefficient, not able at all to drive price to the downside, right? So we have aggressive buyers and we have aggressive sellers failing. So we know that there are some buy limit orders, not only the aggressive side of the market, but the passive side. The passive buyers are also there within this range, ensuring that these aggressive sellers do not push price to the downside. So you have double confirmation here within this range. So kind of a double order block, because you could consider actually this whole range as an order block as well, which is great because when you enter your trade here, well, you have this order block protecting your stop loss, and you also would have a second layer here with this order block protecting your stop loss, which would be down here above both of, below both of the EMAs as well. Now we're going to look at a couple more examples. I think the next example is going to be absorption. So this time we're really going to focus on an area where we saw some absorption, meaning that we were looking this time at an area of demand, an order block where there were some limit orders right here in this area. And let me demonstrate that for you. Excuse me. So as we're going down into this area here, as price is coming down into this area, well, we see some pretty aggressive sellers, which are somewhat efficient at driving price to the downside. But the closer we get, what do we see now at the lows? We see the highest amount, well, maybe not the highest because we had some strong sellers here, but we see a pretty high amount of sellers all stuck or trapped, I should say, within this wick, completely inefficient at driving price to the downside. And here as well, within this candle, at the bottom of this bullish candle, we can see a huge amount of selling negative delta here, minus 223, completely inefficient again at driving price to the downside. So again, it is easy to infer from the fact that we have such powerful selling pressure here at these lows, but price is not coming down at all. This tells us that there are huge buy limit orders within this area, absorbing all of these sellers. All of these aggressive sellers are being absorbed by passive buyers, okay? And then as we retest, now it doesn't have to work every time, plus here we don't have a lot of context. You know, I'm not showing you any sort of technical analysis aside from the order block itself. And here you can see as we go back down, again, some more sellers, less so, but still more sellers failing to drive price to the downside. And then we have some buyers little by little stepping in, but we can see more absorption into this area of demand, this bullish order block, okay? So you now have the two types of order blocks. Here I can give you an example of some Confluence, but I think it's more interesting to get right into my actual trades because again, these are not trades that I took. Here it's just interesting to see that we had a break of structure. And I guess this is interesting for the ICT SMC people. Let's zoom out. We have a break of structure with a huge sell-off here. This candle, I'm guessing here, would be what you would call an FVG. That's not really my sort of terminology, but we do have a gap here. We could say there's an imbalance. So we zoom into this FVG, right? And instead of just kind of guessing where the order block is, or I know, I think ICT people don't see order blocks within FVGs, but essentially, if you zoom into this area where, into this gap where you have a cluster right here of strong sellers, minus 83, minus 89, and huge buyers, plus 169, completely failing. I mean, the candle was a huge bearish candle closing down here, minus 130 here as well, plus 130. So here we have a cluster of aggressive sellers, very strong aggressive buyers and more aggressive sellers, and the buyers are failing to drive price down and the sellers are very efficient. So this is a perfect area to get a short from, right? Plus you have a Fibonacci confluence. As you can see, this would be a 0.5 Fibonacci, and here's the golden zone, which we didn't quite reach. But we'll see some more setups like this from my trading journal. It'll be more interesting, but I just like to keep this example for my ICT people, the SMC people, because that's how I trade a gap or a fair value gap. I zoom into the candle, I see where the highest volume is, and I set an order there after a break of structure, right? And I like to have Confluence. In this case, we have the Fibonacci golden zone, and we have the EMAs also right after a cross, which is pretty good. Okay, so enough with that. Let's get into some setups now. Some setups from actually my journal here. Okay, because now we have Confluence. We're really looking at Confluence with the order blocks because we're not going to trade these order blocks by themselves. We want to have them within Confluence. So here, as you can see, I took a short here. Now let's see why. Well, we were in a downtrend. We broke below the previous day value area low. We had an area of supply here, a bearish order block, because we can see, look at the numbers here. The numbers were what, 47, 48. These were the highest numbers we've seen in the last 10 candles. And all of a sudden, minus 116. So huge spike in volume there. We close well below our area of support with some pretty strong sellers here also. So here we have an area of supply. Then I pulled the Fibonacci from this high to this low. As we retrace here, we have our golden zone right here with the area of supply with an anchored VWAP, which is this little dotted white line here. I'm not going to get into that right now, but it was anchored to a previous high. What else do we see? As we retest, we see not a huge amount of buyers, but all of the buyers are at the top of these candles here and failing again to drive price to the upside. So we know they're being absorbed in this area again after these aggressive sellers. So we had aggressive sellers here, and now we know we have sell limit orders here. So everything comes together. And we're not, again, going to get into too much detail, but look, this is a bearish candle. And yet we have positive delta, just +5 positive delta, but bearish candle. This is 100% a confirmation of absorption at a very strong level. So that's just a great setup. And here also, this candle here is a red bearish candle with +88 positive delta. So that's a huge amount of delta, or pretty strong amount of delta, of positive delta. Yes, yet we have a bearish candle. So we have two candles showing us absorption in a row. So that was just a perfect confirmation for me. And again, we were breaking below a lot of support that became resistance. Now here, let's look a little bit at the structure before we get into the footprint chart on this trade. So we retested the previous day value area high. We rejected from it. Then we broke below, sorry, clean this up here. We broke below the previous day open, which is a strong level. We had a break of structure here because we closed below these lows here. We broke below the session VWAP, this line right here. And then we go retest our area. I guess you could draw a Fibonacci now, maybe not. No fib here. So just structurally, that's a good looking trade. Now let's zoom into the footprint chart on the next slide here. This is the same trade, the same setup, just zoomed in. So my entry was right here because, as I've demonstrated, we broke below a lot of support, very significant levels, and we were now retesting them. So what happened as we retest them? Well, as we were breaking down, we have 25, 21. These are lower numbers than some of the other examples I've shown, but it's a different session, it's a different day. So you have to adapt. And you can see that even though these numbers are lower than before, well, within the context, they're pretty high. A high number within this context would be, the high 20s, low 30s. So here we could see there was already a lot of buyers here being absorbed, then some aggressive sellers being efficient at driving price lower. Here, strong aggressive sellers. Here, it's all green here. So it's all buyers within this small range, completely failing to drive price to the upside. Therefore, we know these buyers are being absorbed by sell limit orders. I'm sure you're starting to understand what we're looking at here now. So I had a sell limit order here. And what's interesting with this trade, I was not waiting for confirmation and shorting maybe from down here. I just put an order here because I knew I had 2 layers of protection. I really liked my odds on this trade. We broke below all of these levels of support that were now potentially resistance. And I had a bearish order block here with all of the absorption here and the aggressive sellers. And I had a bearish order block here. So I enter from this order block, and then I have 2 layers of protection, this order block and this one, plus we have our previous day open. So that was just a perfect setup for me. Moving on to the next one. Here, what do we have? So we don't have a lot of context because we're not zoomed out, we're zoomed in, but essentially I'm guessing it's just a very bearish context. We do break below the previous day value area low with a lot of selling volume. We have a lot of buying here in this like this cluster here, these clusters between these 2 candles, a lot of buying completely failing to drive price to the upside as we break down below previous day value area low. Again, buying failing, selling being efficient. We have a bit of absorption down here, but within the context, it was just a small scalp, as you can see. Pretty risky trade. I don't take these very often. Tight stop loss. I just like my odds on this one. A lot of volume, very clear cluster here. That's not a perfect example of a setup, so you can actually ignore that because I don't want you, if you're not that experienced, I wouldn't advise you to take these sort of trades. Not enough confluence, not enough structure. While looking at clusters, at structure and confluence, now that's a perfect example. And here it's an example of passive orders, of absorption here, just true absorption here. So first of all, confluence, this is very important. It's the subject of my previous video. By the way, if you haven't seen that, you need to know how to draw these levels here. So volume-based levels. So we had the previous day value area low, the previous day value area low as well, and a strong Fibonacci golden pocket here. We have some buyers, not that strong to be fair. We have some pretty strong buyers here, 70, that's a pretty big number within the context, right? And then we have a nice response from the aggressive sellers as well. So the aggressive buyers are failing to drive price up to the upside, obviously, beautiful confluence. And then as a confirmation here, we have the aggressive sellers stepping in also. Not huge, but still pretty decent sized. So I really like my odds here because of the beautiful confluence. and the absorption and the answer or the response from the aggressive sellers. So I didn't enter, I could have entered down from here, but I wanted to get a better entry, so I just had a limit order, sell limit order right here. Slightly risky technically because we did have, and that's why I kept it here on the chart, we did have a bullish order block, and that was a pretty nice order block. And this is where it's going to be a bit difficult for you guys to navigate sometimes. It's like, I want to short here because there's absorption here, but also I'm worried about this order block right here. And that's totally fair, and that's going to happen a lot. But sometimes you just have to trust your technical analysis and understand where the very powerful levels are. Again, that's the subject of a previous video. If you haven't seen it, you absolutely have to see that. I'm not going to get into that too much. This will be the subject of another video. Is that one? Okay, one more example here. Clear structure, okay, bearish structure. We closed below the previous day value area low, closed below our session VWAP, and we have an area, a high volume node here, which could be also interesting resistance, and a low volume node right here, which could be, I didn't draw it on the chart, but would have been nice. Either way, what we have here, you can see this is an area of absorption. We're going to zoom into it in a minute on the next slide. We have a Fibonacci golden zone, and we have a pretty nice downtrend here. So zooming in now, well, exactly what we'd like to see for these setups. We have the aggressive sellers here. We have very aggressive buyers here failing to drive price to the upside. So what's going on? Sell limit orders absorbing all of that buying power. Okay, so this is a bearish order block confirmed. We have nice confluence as well. Just two confluences, but pretty good within the context, very bearish context. We have our Fibonacci golden zone. This time I did wait for a confirmation because I didn't have that much confluence. But here you can see as we retest this level, 105 plus 76 bullish delta, failing to drive price to the upside. A decent response from the aggressive sellers, but that's not what was the most important for me. For what mattered the most was this order block here and this superb absorption here right at the highs. So these buyers trapped at the highs, being completely inefficient. And I'm pretty sure this went a lot lower. So that was a scalp, but I could have been a little bit more greedy on this trade. Yeah, okay, one last example. Okay, this is the structure. We're breaking above previous day value area low. We are entering, I think this is a bearish order block that I drew here, but I was willing to take that trade, take that risk, and I put my stop to break even as soon as we started breaking out here. So, and we're above the session VWAP, above previous day value area low. So there's for the context, and again, similar setup than the first one I showed you in the video with the 101 cluster. Well, we're breaking above a level of resistance with a high amount of delta, beautiful little order block right here, area of demand. So entry on the next candle on the retest here, buy order on the retest of that order block. Stop loss could have been a little bit lower, could have put it below VWAP for extra, extra protection. But, that went to take profit, and that was a very nice trade. There you go. I think that's it for me today. I don't want this to be too long. I hope you guys found that useful. Please drop a like. It helps the algorithm. What can I say? And do drop some comments if you have some questions. You know that I like to answer these questions. I'm very happy to read the comments, the positive comments. Tell me about your story, like how things are going, if you've been watching my videos for a while. If you have some issues, I'm happy to answer questions. If you have some criticism, constructive criticism and conversations are always welcome. I have no problem with that at all. So yeah, guys, I hope to see you in the next video. I'm not sure, I can't quite recall what the subject of the next video is going to be. We might look into delta divergences. We might look into entry models, but we will have an entry model video. Listen, I'm not so sure, guys, but it's coming up. It's coming up, and always check my short videos as well, because I share several times a week short videos, 1 or 2 minutes, just describing a setup, just like I did right here. So stay tuned for that. I hope you guys have a great day.